Hey guys, welcome back to our channel Accounts Guru Cool. Learn accounting online. So today we are here after a short break, and now we are again going to continue with the more videos related to the accounting and finance, which are going to give the more knowledge of our viewers related to practical as well as theoretical. And in addition to that, how it's going to be work into the practical scenario into the accounting and finance. That's all we are going to discuss in our upcoming more videos related to accounting and finance. So now uh, we know related to R2R how much the journal entries are important, and most of the interviewers related to the record to reports, they used to ask the questions on the journal entries. So considering that, we thought to have one video related to that, which are going to give the more clarity to our viewers to know what sort of questions interviewer are going to ask and how we have to give the answer for that. That's all we are going to discuss here. We have added the first one or two slides related to the questions, what we are going to discuss in depth and how you have to give the answer for that. And if you feel out of that, whatever we have the questions, you already knows the answer for that. So guys, there is no need to watch the video till the end because we know how much is the importance of we have for our time. So we are going to start related to the R2R journal entries, interview questions with expected answers. So request viewers to like the video, share the video, and subscribe our channel to get the more practical knowledge related to accounting and finance. If you want to go for any sort of training related to the accounting and finance or any software training, so you can reach us on our email ID, that's accounts.gurukul@yahoo.com. So here we are. And here, as we mentioned, we are going to see first the list of transactions, list of journal entries, interview questions, what we are going to discuss in depth or in detail. First, what is the accrual basis of accounting? What are accruals? What are accrued expenses and when are they recorded? What is a journal entry? What are prepaid expenses? What is the provision for bad debts? What is the difference between an accrual and a deferral? What is depreciation? What are reversing entries and why are they used? What is deferred revenue? What are adjustment entries? What is the difference between accounts payable and accrued expenses payable? What is the accounting cycle? What is bad debts expense? Where does revenue received in advance go on a balance sheet? What is bad debts? What is the monthly close? What is a deferred expenses? What is interest expenses? What are balance sheet accounts? What is accrued interest? Where are accruals reflect on the balance sheet? What is prepaid insurance? Is a prepaid expense recorded initially as an expense? What is a non-cash expense? When should cost be expensed and when should cost be capitalized? Will you please explain unearned income? What is accrued income? What are accrued revenues and when are they recorded? And what does overstated means? So these are all the 30 questions related to the journal entries we are going to discuss here with expected or probable answers for these questions. So the first, what is the accrual basis of accounting? And we know these questions are related to know how much is the basic fundamental knowledge you have related to accounting and finance. So the answer should be under the accrual basis of accounting, revenues are reported on the income statement when they are earned. Under the cash basis of accounting, revenues are reported on the income statement when the cash is received. So here, the accrual basis accounting system, accounting base of the accounting, it means that we have to report the revenue in the income statement when they are earn, irrespective either we are going to receive the amount for that or not, says either we are going to receive the amount or not. Irrespective for that, we have to book the revenue. Another accrual basis of accounting, expenses are matched with the related revenues are and are reported when the expense occurs, not when the cash is paid. The result of accruals accounting is an income statement that better measures the profitability of a company during a specific time period. So accrual basis of accounting, it says that it's not going to be any relevance with either you done the payment or not, either you received the payment from your customers or not. Irrespective of that, as in when your income incurred, you have to book it as a revenue. As in when the expenses accrued, you have to book the expenses in accounting. Now, what are accruals? Accruals are adjustments for one, revenues that have been earned but are not yet recorded in the accounts, and expense that have been incurred but are not yet recorded in the accounts. The accruals need to be added via adjusting entries so that the financial statements report these amounts. What are accrued expenses and when are they recorded? Accrued expenses are expenses that have accrued, that have occurred but are not yet recorded through the normal processing of transactions. So what are accrued expenses and when they are recorded? The accrued expenses, it says that expenses is rendered, occurred, delivered, but we haven't recorded through the normal processing of the transactions, which says you have received the invoice and you book that invoice into the system. Since these expenses are not yet in the accountant's general ledger, they will not appear on the financial statements unless an adjusting entry is entered prior to the preparation of the financial statements. So accrued expenses or provision for expenses, such expenses for which we already avail the services, but we haven't received the invoice for that. And since we haven't received the invoice, so these expenses are not going to be flow from your normal subledger into your GL. So you have to pass the adjustment entry into the GL to have the proper impact or proper presentations of our financial statements. What is a journal entry? In manual accounting or bookkeeping systems, business transactions are first recorded in a journal, hence the term journal entry. What are prepaid expenses? Prepaid expenses are future expenses that have been paid in advance. You can think of prepaid expenses as a cost that have been paid but have not yet been used up for or having not yet expired. So it means that we paid the amount for our future expenses. That's the meaning of prepaid expenses. What is the provision for bad debts? The provision for bad debts might refer to the balance sheet account, also known as the allowance for bad debts, allowance for doubtful accounts, or allowance for uncollectible accounts. In this case, provision for bad debts is an contra-asset account, an asset account with a credit balance. It is used along with the accounts receivable in order to report the net realizable value of the accounts receivable. So that's the meaning of provision for bad debts. What is the difference between an accrual and deferral? An accrual occurs before a payment or receipt, but deferral occurs after a payment or receipt. There are accruals for expenses and for revenues. There are deferrals for expenses and for revenue. What is depreciation? A depreciation is the assigning or allocating of a plant assets cost to expense over the accounting periods that the asset is likely to be used. That's the meaning of depreciation. What are reversing entries and why are they used? Reversing entries are made on the first day of an accounting period in order to remove certain adjusting entries made in the previous accounting period. So there are certain types of journal entries which are going to be reversal journal entries or recurring journal entries or permanent journal entries. So wherever we have the reversing entries related to that, we have to do the reversal on the first day of the following month. Whatever we have done the adjustment entries in a previous month, for that we have to do the reversal if that journal entry is related to the reversing entries. Reversing entries are used in order to avoid the double counting of revenues or expense and to allow for the efficient processing of documents. Reversing entries are most often used with accrual type adjusting entries. So that we have to do the reversal of the accruals entries or provision for expenses, what we have booked to avoid the double impact of that transaction into the books. So that's the meaning of what are reversing entries and why are they used. What is deferred revenue? A deferred revenue is not it revenue. It is an amount that was received by a company in advance of earning it. The amount unearned and therefore deferred as of the date of the financial statement should be reported as a liability. The title of the liability account might be unearned revenues or deferred revenue. The such kind of amount what we have received from our customers for which we haven't yet delivered the services. We are going to deliver the service. So that's going to be considered as a deferred revenue. What are adjusting entries? Adjusting entries are usually made on the last day of an accounting period, year, quarter, or month, so that the financial statements reflect the revenues that have been earned and the expense that were incurred during the accounting period. What is the difference between accounts payable and accrued expenses payable? I would use the liability accounts payable for suppliers invoices that have been received and must be paid. As a result, the balance in accounts payable is likely to be a precise amount that agrees with supporting documents such as invoices, agreements, etc. What is the accounting cycle? The accounting cycle is often described as a process that includes the following steps: identifying, collecting, and analyzing documents and transactions, recording the transactions in journals, posting the journalized amounts to accounts in the general and subsidiary ledgers, preparing an unadjusted trial balance, perhaps preparing a worksheet, determining and recording adjusting entries, preparing an adjusted trial balance, preparing the financial statements, recording and posting closing entries, preparing a post-closing trial balance, and perhaps recording reversing entries. That's all going to be considered under the accounting cycle. What is bad debt expenses? The bad debt expense often refers to the loss that a company experiences because it sold goods or provided services and did not require immediate payment. The loss occurs when the customer does not pay the amount owed. In other words, bad debts expense is related to a company's current asset accounts receivable. It is common to see two methods for computing the amount of bad debt expenses. One is direct written off method, and second one is direct write off method, and second allowance method. Where does revenue received in advance go on a balance sheet? Revenues received in advance are reported as a current liability if they will be earned within 1 year. The accounting entry is a debit to the asset cash for the amount received and a credit to the liability account, such as customer advance or unearned revenue. As the amount received in advance is earned, the current liability account will be debited for the amount earned and the revenue account reported on the income statement will be credited. This is done through an adjusting entry. What is bad debts? The term bad debts usually refers to accounts receivable or trade account receivables that will not be collected. However, bad debts can also refer to notes receivable that will not be collected. The bad debts associated with accounts receivable is reported on the income statement as a bad debts expense or uncollectible accounts expense. So bad debts means that if we are not expecting amount to be received from the trade receivables, from accounts receivables, so we have to create some provision for the bad debts. What is a monthly close? In accounting, monthly close is the processing of transactions, journal entries, and financial statements at the end of each month. Under the accrual method of accounting, it is imperative that the financial statements reflect only the transactions and journal entries having relevance to the current month's relevant revenues and expenses and end of the month assets and liabilities. Expressed another way, the monthly close must achieve a proper cut-off of each month's financial activities. What is a deferred expense? The term deferred expense is used to describe a payment that has been made, but it won't be reported as an expense until a future accounting period. What is interest expense? Interest expense is the cost of debt that has occurred during a specified period of time. What are balance sheet accounts? Balance sheet accounts are one of two types of general ledger accounts. Income statement accounts make up the other type. Balance sheet accounts are used to sort and store transactions involving assets, liabilities, and owners or stockholders' equity. What is accrued interest? Accrued interest is the amount of a loan interest that has already accrued, but has not yet been paid to the lender by the borrower. The accrued interest will be reported by the borrower as both one, an expense on its income statement and a current liability on its balance sheet. The accrued interest will be reported by the lender as both revenue on its income statement and the current assets on his balance sheet. Where are accruals reflected on the balance sheet? Accrued expenses are reported in the current liabilities sections of the balance sheet. Accrued expenses reported as a current liabilities are the expenses that a company has incurred as of the balance sheet date, but have not yet been recorded or paid. Typical accrued expenses include wages, interest, utilities, repairs, bonuses, and taxes. Accrued revenue are reported in the current asset sections of the balance sheet. The accrued revenues reported on the balance sheet are the amounts earned by the company as of the balance sheet date that have not yet been recorded and the customers have not yet paid the entity. So the accrued expenses says that's related to the provision for expenses wherever we have incurred the expenses, but we haven't received the invoice for that. So we have to consider it as accrued expenses and we have to park that towards the balance sheet, towards the current liability. And similarly, the accrued revenues are going to be reported under the current assets, and the accrued revenue says that we deliver the services, but we haven't raised the invoice for that. Where are accruals reflected on the balance sheet? In continuation to that, accrued expenses and accrued revenues are also reflected in the income statement and in the statement of cash flows prepared under the indirect method. However, these financial statements reflect at a time period instead of a point in time. What is prepaid insurance? A prepaid insurance is the portion of an insurance premium that has been paid in advance but has not expired as of the date of the balance sheet. This unexpired cost is reported in the current asset account as a prepaid insurance. As the amount of a prepaid insurance expires, the expired cost is moved from the asset account, prepaid insurance, to the income statement account, insurance expense. This is usually done at the end of each accounting period through an adjusting entry. Is a prepaid expense recorded initially as an expense? A prepaid expense might be recorded initially as an expense or as an asset. There are two types of recording the prepaid expenses. If a prepaid expense is recorded initially as an expense, then at the end of an accounting period, only the true expense amount for the period should remain in the expense account, and the future expense, the portion that has not yet expired, the unexpired part, must be credited to the expense account and debited to the prepaid asset account. Is a prepaid expenses recorded initially as an expenses? To continuation to that, if a prepaid expense is recorded initially in a prepaid asset account, the true expense of the period, the expired portion, need to be removed and debited to the related expense account. The remaining amount in the prepaid asset account should be the unexpired portion. What is a non-cash expense? A non-cash expense is an expense that is reported on the income statement of the current accounting period, but there was no related cash payment during the period. When should cost be expensed and when should cost be capitalized? Costs should be expensed when they are used up or have expired and when they have no future economic value, which can be measured. For example, the August salaries of a company's marketing team should be charged to expense in August, since the future economic value of their August salaries cannot be determined. Costs should be capitalized or recorded as assets when the costs have not expired and they have future economic value. Would you please explain unearned income? Unearned income or unearned revenue occurs when a company receives money before the money is earned. This is also referred to as a deferred revenues or customer deposits. The unearned revenue amount is recorded in a liability account such as unearned revenues, deferred revenues, or customer deposits. After the amount has been earned, the liability account is reduced and the revenue account is increased. What is accrued income? The accrued income is an amount that has been earned. There is a right to receive the amount and it has not yet been recorded in the general ledger accounts. One example of accrued income is the interest earned on a bond investment. What are accrued revenues and when are they recorded? Accrued revenues are fees and interest that have been earned and sales that occurred, but they have not yet been recorded through the normal invoicing paperwork. Since these are not yet in the accountant's general ledger, they will not appear on the financial statement unless an adjusting entry is entered prior to preparing the financial statements. What does overstated means? When an accounting states that a reported amount is overstated, it means two things. One, the reported amount is incorrect and the reported amount is more than the true or correct amount. So that's the meaning of what does overstated means. So that's the 30 questions what related interview are going to ask related to the journal entries interview questions with answers. So thanks guys for watching the video till the end, and request viewers to like the video, share the video, and subscribe our channel to get the more practical knowledge related to accounting and finance. Thank you.